Okay, the S&P 500 continues to get record closes. Again, we've reached the objective target level at the monthly trend line. I told you I think we can overthrow it and go to the trend line in the weekly time frame towards 6,100. The Dow was down 128 points. 128 points. The S&P 500 was up almost 1/4%, up just under 15 points to close at 6,047. The Nasdaq was up under 1%. Nasdaq 100, I think, was just over 1%. I didn't look at the final close. We'll take a look at it. The Russell was up about 1/4% like the S&P 500. The VIX was down 1.18% to close at 13.35. Art Cashin died at age 83. I've always liked him. Well, may he rest in peace. He was a really, really nice man. Over the weekend, I talked about the Nvidia charts, and again, I do think that you got a good shot of a right shoulder setting up here, and again, I think that could take the S&P towards the upper boundary of the rising wedge and the upper channel in the weekly time frame. Again, towards that 6,100 area or on into it, 6,000 area on into likely the 6,100 area somewhere. Would overthrow the monthly trend line on the S&P, but I think we've got a possible right shoulder here, and then again also take Nasdaq to the upper boundary of the rising wedge. I'll show you that chart. After dropping 14% surrounding earnings, rebounding off this horizontal support trend line right here, came right to it, bounced, and our 50-period moving average and this rising trend line right here, including the shadow. And again, I think it's very possible that we establish a lower high. We're reversing with this topic tail right off of that main trend line, long-term trend line in the weekly time frame, about 2 channels in the weekly time frame. Again, a 5-day sell-off. We rallied up a little bit above this peak, and then we reversed and got a 5-day sell-off from the high. Hitting this topic tail, we got a topic tail. This sell-off gave us a topic tail on the weekly chart, which you can see right here. In the weekly time frame up close here, we got that topping tail, and again we've got the multiple point triple divergence on the RSI. We've got the divergence here on the MACD. Again, I think we're going to rebound, get that right shoulder on the daily chart, and then I think we're going to come back down and break this trend line right here and take out the 20-week moving average. I think we'll get a 20-50 sell signal where we'll drop below the 20-week and we'll drop below 50 on the RSI once that happens. During the uptrend, we saw the push here above the 50 level in the RSI. We got back above the 20. We pulled back to it. And we briefly dropped back below 50, then got back above it, and we've been above it ever since. The pullback right here, we found support right there. The pullback right here at 50. Again, we found support right here. So again, getting back above that 20 each time. You got to drop below the 20 and stay below it if we're going to see a reversal on a sell-off. But I think when this trend line breaks, I think that will terminate the bull market, and it will also validate a reversal if we don't move above this high right here. If we do get a lower high, it will also validate a reversal for the longer-term trend line I've been talking about if these divergences begin to play out here in December. Now, this is a channel from the low in 2022. Now, this is the Nvidia channel in the weekly time frame from all the data that we have, all the price data we have going back into the 1990s. This is the channel that we just looked at. If we break it, we'll confirm a reversal off of this upper boundary channel. The reversal that we had at the June peak turned down. Now, just quickly, we have Nasdaq moving to a new high on an intraday basis there. It might have got a new closing high as well, but we don't have that with Nvidia, and if we get the right shoulder developing with Nvidia, Nasdaq goes up to the upper boundary, which I think it has a good shot of doing. We could see something very similar to what we saw back over here at the June and July peaks, where Nvidia got a lower high, but Nasdaq got a higher high just before the big sell-off. See a very similar situation, and again, we have this larger double top that could be in play on Nvidia, or again, it could evolve into a larger head and shoulders pattern even. We've moved up above this high, but you've got that both of those patterns in play, really depending on if a right shoulder sets up or not. But again, could Nasdaq diverge from Nvidia? I talked about a divergence possibly between The NASDAQ and the S&P both are moving to new highs now. I'll be watching those upper boundaries on their rising wedges. So if Nvidia gets that right shoulder, sets up a lower high, I'll be looking for a move up into this upper boundary now that we're inching just a little bit higher above our previous peak over here, where I told you we were going to get a pullback before it happened. The 60-minute charts told us that was correct. I thought we had bounced off this trend line, which again also happened. I think we're going to go up to this upper trend line, and then I think that we're going to see this pattern begin to break down once that happens, this rising wedge pattern. Let's just see, does NASDAQ and S&P diverge? They did back in June and July. Just real fast, if I go back a little bit further, here is the June peak right here, and then we pull back. NASDAQ went higher. Their July 10th peak, Nvidia made a lower high. So something we're paying attention to. I think we're headed towards this upper boundary on the NASDAQ and on the S&P 500. Important trend line. I think this is the most important trend line in the stock market right now, this channel, because if it breaks, it's going to terminate, in my opinion, the AI rally with Nvidia and likely terminate the bull market with NASDAQ and S&P 500. At the ISM manufacturing, it's still below 50. It came in at 48.4. It was supposed to come in at 47.5. Came in better than expected. But again, we're still below that 50 area, which again is problematic with recession on the horizon. Later in the week, we will get the jobs report. It's supposed to come in at 214,000. Remember, we had that 12,000 number, and I think will eventually be revised to a negative number. But at the 12,000 before the election, a weak number due to the hurricanes and the labor strike. Expected to come in at 214. We'll be watching that. Again, we know that from the first 10 months of year, comparing from last year, that we're still 838,000 jobs below the first 10 months of 2023. So again, this is one of the signs. I talked about this for a week ago. This was one of the signs right before the recession hit. We started seeing that weakness in the labor market, which eventually led to negative numbers. And again, as I keep saying, eventually that is coming. The jobs report either just before the recession hits or when it starts. Begin to see that, which again, the SOM rule was triggered in July. 6 months is from that being triggered is January. It's a little bit longer. Again, you're looking at right after the first quarter there in April. Those 9 months, I don't know that we make it that long, but again, I've talked about the recession hitting 6 months. A little bit less, maybe a little bit more, maybe, just under 6 months or just over 6 months, but we're looking at that. And again, the SOM rule, it'll be 6 months here, reach January. We might see it show up December, January, or February. We still might have it show up. And then later on, we find out, hey, it started in December or it started in January after the fact, which is often the case. But regardless, again, we know the yield curve uninverted in September. So again, very good chance we see a peak in the market December, January. If it drags beyond that, you're looking at probably the first quarter. But that recession's going to hit, all likelihood, in the first quarter, the very beginning of the second quarter. And before that recession hits, the market should begin to price it in. We're looking at this carefully. Fed is making the same mistakes that they made back in 2007, focusing on inflation when they should be focusing on the recession. Jobs report coming in later in the week. We'll be watching that. The unemployment rate is supposed to tick back up to 4.2. It's currently at 4.1%. And then the following week ahead of the Fed, and again, we have the Fed meeting December 18th, but on December 11th, we're going to get the CPI data and then the PPI wholesale inflation December 12th, Wednesday and Thursday of the following week. So just some things to be aware of coming down the pike. Now, one thing to be aware of is that we have a 7 of a 9 on the NASDAQ. Now, again, these have shown periods of price exhaustion in July over here, in August over here, and then we filled the gap with our 13 count. We got a pullback, but then again, I told you signals down here hit a support on the S&P 500. We're telling us we were going to get a rally ahead of the presidential election and the Fed meeting, and that did take place. We pulled back. Now we're getting potentially another 9 count, a 7 of a 9 that could complete by Wednesday. Count doesn't mean the top is in. It means price exhaustion. Sometimes it does mean that. Again, here it marked the very top right here. Here we went a little bit higher. Other times a little bit higher, and then you begin to turn just a little bit higher. But again, it is showing possibility of another 9 count completing by Wednesday. I do think we'll reach the levels I've talked about the weekend, and in this video, I think the levels upper boundary of the rising wedges are likely to be reached. You get the 9 count and go a little bit higher. I talked about this last week. Again, the 13 count getting ready to set up. It did. We can get a trend extension to that upper boundary of the rising wedge, which is what I think is likely going to be the case. Got a 7 of a 9 count here. The Dow's got the same count. Russell had a 7 count, but it got canceled out. Could be diverging with the S&P 500 as it's making a lower high. But again, I think we're moving towards this upper boundary here. And then I think we're going to likely turn. And again, rising wedges, you can even overthrow the upper boundary. But I think that 6,100 area is going to come into play right here. I think that, again, in the coming days ahead, this week, next week, we could reach this area if the rally can continue, or even if we pull back a little bit and then continue to try to go up towards this level, possibly ahead of the Fed meeting. But if you complete the 9 count, you have a 13 followed by a 9, and you might get the 9 and go a little bit higher. But a 13 followed by the 9 is a double sequence count reversal signal. It is a reversal pattern. Now, these others 9 counts gave us sell-offs here, okay, but we're hitting the trend line in the monthly time frame, and if we rise up to this upper boundary here, we could reach that trend line in the weekly time frame, the upper channel line, and again, the double sequence count could produce a major reversal in the trend, forming this rising wedge pattern with the S&P and the Nasdaq. 7 of 9 counts on the Dow, on the S&P, on the Nasdaq 100. We'll see if those 9 counts complete on Wednesday. Do we overthrow them? Or again, sometimes they produce an immediate reversal. But again, as you can see, like over here at the 9 count, went a little bit higher, and then you got your turn, went a little bit higher, then you got your turn. These were pullbacks in the larger uptrend. If this rising wedge begins to play out, again, it could mark a major reversal for the stock market at key resistance levels. Something to be aware of, again, count, every bar has to be above the bar 4 bars ago. There can be no interruptions. And then also, because you get a 9 count at a peak or a bottom, again, does not mean it's over. Prices are getting tired. You can see a pullback or reversal. In this case, just be aware of the 7 of a 9. Could be complete a 9 count by Wednesday. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the indicators, if you like the charts, please let me know that by supporting the channels. I don't have any sponsors. I turn all those offers down because I don't want to sell you a bunch of stuff you don't need. I just ask that you partner with me and support the channel, but I do need to hear from you in order to make it work. Take a moment to help out. I would really, really appreciate it. Donate any amount or make it a recurring donation. If you do that, I thank you for that. Thank you for your consideration in supporting the channel. Just real fast, the signals remain bullish. I've been calling for all-time highs, new all-time highs. It's our target. We reached that target there on Friday, but I told you I thought we'd overthrow the target. Long before we ever reached it, I told you I thought we'd reach that 6,100 area because that's a resistance in the weekly time frame. Reach the trend line in the monthly time frame. Signals remain bullish, but divergences are forming. We'll be watching that closely. Is it close but no cigar for the weekly trend line? We go ahead and reach it. Potential 9 counts to complete on Wednesday, so we'll be watching. Go higher, and does a brand new fresh divergence develop? Does this one continue start playing out, and maybe it's not done yet, or we go a little higher and then begin to see it play out? We'll be watching to see how it unfolds. S&P daily here. Same thing for the Nasdaq. Again, the Nasdaq's got the divergences developing on the awesome oscillator, the MACD, and other indicators. So again, we'll be watching, pushing to a new intraday high. P just up just under 0.25%, just under 15 points. And again, I'm looking at this upper boundary. We have this rising wedge. We had, again, the expanding, the breaking of the previous trend line, the expanding into this larger rising wedge. The NASDAQ has the same pattern. Again, I'm looking at this upper boundary, and if we move towards that, you're looking at the 6,100 area. talking about. And I think that if we do that, we could reach that upper boundary in the weekly time frame. Again, we are moving to new all-time highs. I think it's likely going to continue. Possible divergence under construction on indicators here with momentum. S&P daily chart forming this very, very large divergence here with the peak back over here on the MACD, very similar to what we had back over here. This divergence just gave us a pullback. This one's likely going to give us a reversal because of the weekly and the monthly charts. Again, the rising wedge here, very, very close to this trend line from this low here. And again, connecting these points. There's been resistance, resistance, resistance. Again, we're likely moving to that 6,100 area that I've been talking about. And again, upper boundary of the rising wedge and this trend line very close to one another. Also the trend line here, again, the blue trend line, these lows here, parallel to the peak here and the peak here, pointing up again towards that 6,100 area. Again, likely going to reach this upper boundary right here, and again, that would very close to the trend line in the daily time frame, or going further back with the rising wedge again to the previous peaks earlier in the year 2024. Also a trend line there to be watching. If we hit the one in the daily from the more recent price action, is really from the July sell-off, connecting the levels over here from the July sell-off, some counter trends that happened in this low over here again. Just have a really nice looking rising wedge in the daily time frame, and I think if we reach it, we could reach that blue line right there. The divergence will eventually play out, but again, just remember, we just reached the target level there on Black Friday at the 6,040 area. I told you about 6,040, 6,050. Just eyeballing it was that target level we reached. 6,044 on Black Friday, and I think we're going to overthrow it and go to this trend line right here, but then I think we're going to see a reversal in all likelihood surrounding the trend line here in the weekly time frame and on the daily time frame, and then eventually see these divergences play out. Take it higher, suck more money in, get more people complacent, where you get your big rug pull. And again, these divergences will play out, but it's a multiple point divergence, unlike right here. This will likely lead to a major reversal, likely completing a top and ushering in a bear market. Time is short, and again, as we go higher, more and more people will become more and more complacent. The bulls will think they're indestructible. The bears will say the other divergences played out, but this one won't, and throw in the towel. And that's what it's designed to do. It's designed to create a huge amount of complacency. The institutions are going to allow this to be pushed up on lighter volume, then I think we're going to get a rug pull. These trend lines really important in the daily time frame, here in the weekly time frame on the S&P 500. And I've talked about the divergence right now. We had one in 2022. We had one at the 2020 top. These were simple divergences. One at the bottom, a bullish divergence at the 2022 bottom. This one will likely lead to a major reversal. Talked about the monthly chart where we have these divergences now forming again. We have a divergence right here from this previous peak, and again, multiple points from these other peaks. Every single divergence has led to a major sell-off. Now here we're diverging from these other reference points, very similar to what we did right here in 2020 before the big sell-off. Very similar to what we did at the 2000 top here. So again, eventually, if this channel's broken, we take out the 10-week moving average. That would be bearish. Other times, or 10-month moving average. Every time we've taken out the 10-month to a major downturn, these downturns that I've talked about. But again, we have found support at the 50, the green line here, just above it, or just below it, or right around it. And again, time we reached it was after the 27.5% sell-off at the 2022 low. It's likely that we're going to reach it and then begin to take out this trend line. Since we're about to move into recession, that will terminate the bull market. And we've got divergences on other indicators like the price oscillator here, and it's all over the place in the monthly and the weekly time frame. Bear market will be defined not by a percentage drop, but when we take out the 10-month moving average, and that takes us below the 50-month. Here you took out the 10-month, and then you took out the 50-month, and that confirmed it. You got the bigger drop. Took out the 10-month, eventually took out the 50-month, and that, again, eventually validated a bear market. Here we bounced off the 50-month moving average over and over again. Again, you got people telling us, oh, this was a bear market. No, that's part of the bigger bull market, just like the 35% drop here, the 21% drop here. Again, the bull market never ended. I think defining a bear market based on percentage terms, well, it may be correct. Sometimes it isn't always correct because, again, you didn't get the shortest bear market in history, only lasting 3.5 weeks here. Again, it was a crash move. These crash moves in this larger bull market. You didn't have the beginning where we had a bear market here dropping 21%. That was it. Market, major pullbacks or crash moves in the larger bull market. So keep that in mind. But again, divergences, huge red flags for the market. And again, this is the monthly S&P. Again, as we're seeing these divergences develop, again, we have S&P reaching that long-term trend line now. As of Black Friday, we've reached it there on Friday, that abbreviated trading session. We've now reached this long-term trend line. I think we could overthrow it. The Dow has. Again, we could overthrow it, but again, likely that we're not going to be able to stay above it, and it will likely create a top in the market. But we have reached it, and I've been talking about the S&P reaching new all-time highs over and over and over again ever since we've had the July sell-off. Eventually, the S&P is going to go make new highs and reach one of these two trend lines that I had talked about, the 5750 range to the 6000 range. We reached the upper end of the target, that 6040 area. About that 6,040, 50 area, that mid-range of 6,000. We're likely going to overthrow it and reach the upper boundary on the weekly chart, that upper channel line, and then I think the market will likely turn there. There's a very good chance we see a peak, and now that we've reached the target, the odds greatly favor that we're going to see a peak in December or January surrounding these resistance levels and the negative divergences. I think there's a 95% chance we see peak in December. We only hit the target level on the very last day of November. We don't see it in December. I think there's 98 or 99% chance we see it in January, probably before Inauguration Day. Very similar to what happened in 2000. Back then they were talking about all the tax cuts and everything, and when they got them through, you got a little bounce on it, and then when they got them through, the market tanked even further. Can't stop a legitimate recession from happening. It's going to be clear by the time we get to the first and on into the second quarter there that we are in recession, depending on exactly when it hits. But I think, again, probably a 95% chance. See a peak in December. Not 98, 99% chance in January. And I think, don't see it in January, I think there's probably a 100% chance you're probably going to see it in that first quarter. If we make it past January, based on our recession indicators being triggered, 9 months from the SOM rule being triggered would be April, the recession hitting in April. So I think it's going to hit later than that first quarter. But I think you got a pretty good shot because before the recession hits, the stock market's going to top. So you got a pretty good shot that's probably going to happen in December or January. I think the odds are very high. We had quickly two trend lines. The red trend line from the 29 high excluded the shadow here at the 2000 top. We already reached that at 5750, including it. We're slamming into that there as of Friday. We tagged it, moved off of it a little bit by the close. But again, you can see here we slammed right into it and slammed the brakes on. I think we can even overthrow it here and go up towards that 6100 area. But again, I am looking for a turn at this black trend line right here or just beyond it. I personally believe we're going to move just beyond it and towards the 6100 area, a trend line on the weekly time frame. But again, I am looking for a peak in this area and a reversal. And like I've talked about the possibility of divergences here on the RSI and MACD. And again, I guess is we're still going to try to make it to that upper boundary of the rising wedge, but divergences are already looming over. Now the RSI still may make a higher high than the previous peak, so may the MACD, but our divergence is in place right now as we are making new all-time highs. And it could be close but no cigar with the target levels I've talked about at the 6100 area. But again, I have the guts to tell you what I think. I think we're probably going to reach those levels, start to see a reversal begin. I drew this line right here, again, telling you that I thought we were going to bounce off this 20-period moving average, just like I told you ahead of the presidential election. I thought we'd bounce off this horizontal support and the 50-period moving average here on the S&P 500. We never reached my target. We didn't reach my target level until Friday, Black Friday, which, again, that abbreviated session. I think we're going to overthrow that area just a little bit in all likelihood. We don't have to form a divergence on the RSI. Just reach an extreme. Just something I'm paying very close attention to. Close but no cigar. Do we go up to this next resistance area now that we're making new all-time highs? Now, we are seeing on the 60-minute chart the RSI come up here to a new extreme here, new recent extreme. Again, we might form a brand new divergence in this area going into the 6100 area that I've talked about. We had this divergence over here, and the bullish went back over here. We expected a rally with that off key support. Over here, I told you before the sell-off happened, going to get a pullback, and then I told you we were going to get a bigger pullback because signals warned about that. We did, and we bounced off our 200 period here on the 60-minute chart. Moved to new all-time highs. I told you we come back and fill the gap right here at 59.50, and gapped higher some more, filled it, gapped higher some more, filled it, and here we are getting new all-time highs. So again, if we do pull back, I'll be watching to see if a brand new divergence develops here. Now moving into December, like I said, there's a very good chance we're going to see, now that we've reached the target level, a good chance we're going to see a peak here in December or January. Very well could see those divergences begin to play out. Weekly time frame, the month ends. But we just hit the target level. This is we're going to overthrow it in all likelihood. The MACD had the divergence here. It just gave us a pullback to fill the gap. Now we're forming this larger divergence. So again, do we get another pullback? And if we do, does it end up setting up a divergence on the more recent price action here with the RSI? We got a good shot. That's probably going to be the case. 60-minute chart here. NASDAQ moved to a new intraday high here, and I think it's likely moving up to this upper boundary right here. You've got potential divergences that are still under construction here on the MACD. The RSI still even might move to a new extreme. This is where I think we're likely headed, this trend line right here. And again, the further to the right of the chart you go, the higher it goes. So I think that this is likely where we're headed on the NASDAQ. And then I think you'll see the rising wedge begin to play out and produce a reversal. So just something worth paying attention. This upper boundary here, but we are moving slightly above the previous peak. We didn't close above it, but we did move on an intraday basis above that level. And again, I think we'll see divergences like with momentum here, MACD, the RSI, and other indicators. But really nice looking rising wedge there on the NASDAQ. NASDAQ has this weekly trend line from the pandemic low to the 2021 high. And again, we hit that. We're just underneath it right there. Again, probably moving up to that trend line, maybe even overthrowing it. Then I think we're going to come back, take out the 20, and break this trend line right here from the 2022 low. And I think that will in the reversal. But the divergence, you have the larger one. You got, again, potentially a smaller one that could be developing if we overthrow this previous peak over here. The last time we nearly tagged it just a fraction underneath it. Again, divergence is all over the place on indicators like the MACD and the price oscillators, just everywhere. As we're rising towards this trend line, a new intraday all-time high. Again, we're reaching extremes here on the RSI. I think that if we pull back, we could again see a divergence in this most recent price action, maybe even on the MACD, but we are moving to new highs, reaching extremes. So again, I'll be watching for some type of reversal, but probably at higher levels. We may get a pullback in that we are reaching extremes, although we could stay at extremes for an extended period of time if we continue the rally. But just be paying attention to some of these trend lines I've been talking about on the daily chart, those upper boundaries of the rising wedges, trend lines on the channels in the weekly time frame. We're moving towards those levels.